profitability. Krishna, how are you approaching this space? The big ones have been Tata Motors, which has come back over the last 2 weeks, and even the two-wheelers have done well.
Yeah, we continue to remain positive on the two-wheeler segment. We have seen very good numbers from Hero Motors, and also we expect good numbers coming in from Bajaj Auto. The volume also have been doing well, and the profitability of these companies have been. So this is a pure, broadly a domestic consumption play, and we continue to remain positive on these two counters. On Tata Motors, yes, there have been sometimes concerns on whether this JLR sales will continue to remain as robust as it has been, but the valuation cut was deep, and now it's made a decent bounce back. From these levels, I'm not too sure whether there is a great appreciation possible in this stock.
Would you buy any of the aviation stocks now, Krishna, on the kind of buzz that's going around?
We don't track aviation stocks, Udayan, but generally we avoid, whatever I've heard and seen over the years, aviation stocks don't give sustainable earnings over a period of time. I think the sector is best avoided. The sector is important from an economic perspective, but I don't know whether investors ever make money.
Would you buy either of these stocks from the infra space, Krishna, Crompton Greaves or Punj Lloyd?
Punj Lloyd has a lot of challenges in its execution globally and locally, and so valuations have come up, but I think every quarter you see more and more revelations and write-offs, etc. So I think credibility is a question mark over there, and once that comes in, then maybe that stock could be looked at. We don't have coverage on Crompton Greaves. The numbers are expected in a few days, but we do not have a coverage, so I don't have a view on that stock.
How's retail been approaching the last 4 odd months for the market, Krishna? Because more than anything else, it's been so volatile that it's been tough even for traders to take a call on this market. Any discernible change that you see in retail participation?
Retail participation has been, now it has been stable in the last 3-4 months. Whoever had to leave the market in the last 2-3 years have quit the market. Now whoever remains in this market are the die-hard traders, investors who understand the market up to an extent. But they also are very, very cautious, and nowadays we find that retail investors are also very strict about their stop losses. So basically the risk appetite of the retail investors is very, very low, and they're willing to take small profits and also book losses very fast. Also, if you see the participation in the cash market is pathetic from the retail investors. Most of them have shifted their attention to the futures and option segment, and primarily on the options segment, which is a good thing, because there you upfront know what kind of losses you have when you buy options. So maturity level of the retail investors is improving by the day, and nowadays we also find that equity retail investors have also shifted their attention to the commodity markets. So broadly, equity as an asset class is under pressure from the Indian retail investors.
What are you telling them to do on commodities like gold, which corrected sharply from near 2000 to 1600? Did you see a lot of retail guys getting in then?
See, retail investors have been very active on the commodities market, and I'm not an expert on the commodity segment, so I don't track that very well. But what I can see is that inherently they understand precious metals and energy and base metals, so they have a view and they play on it. But yes, the volatility of the last few months in commodities also has taken a toll. And what kind of gains they made earlier, some of it has gone off the table.
Do you see your clients talking about making entries into infrastructure in beaten down stocks like L&T, even some of the GMR, GVKs of the world, or are they completely disenchanted with that space?
The appetite is very, very low in these kind of opportunities because of the poor visibility. All the investors understand that on a longer term time frame, these kind of stocks will give good opportunities, and the space is very interesting. But because of various policy issues and the environment being as far as liquidity and interest rates are concerned. So currently the appetite is very, very low. But yes, there are some funds and investors who are willing to selectively look at stocks which offer better visibility and where the near-term requirements for dilution are very low. So those kind of stocks are attracting attention, and even these investors are doing very selective nibbling with the caveat that they would be willing to average on the downside, and they have a sufficient the long time frame for reaping the gains out of these stocks.
You've always been strong mid-cap pickers, Krishna. What kind of ideas are you recommending now? Because it's difficult to buy, a Jubilant or a Titan with the prices they're trading at, and mid-caps have become so disparate in their price performance.
I think the story still remains strong as far as mid-caps is. Basically, it's all about the balance sheet and the growth prospects of companies. You can't brush mid-caps the same, across sector-wise or whatever. So we continue to emphasize on the quality of the management, the balance sheet, and reasonable growth prospects, and as you rightly said, also valuations. So here we continue to do bottoms-up stock picking, and I think we are getting good, decent investment opportunities. But if you look at the agrochemical space, most of the stocks in that segment are all mid-caps to maybe larger mid-caps. That segment continues to do well and have delivered good returns. So if you are looking for some sectoral kind of a theme, then that space offers still good opportunities for investors.
Anything from some of these consumer discretionary type stories though, Krishna?
The valuations have run up, and so we are not very comfortable with recommending those stocks at current prices. They will continue to do well, but the returns probably will be not exciting for the average investor.
So for how much longer do you see the market in a trading range, Krishna, for the foreseeable future?
I think the way to look at it would be is that, look at the policy initiatives from the locally and how things pan out globally. If this continues to remain the way it is, then as it is, maybe next 6 to 12 months could again be a period of consolidation, because without policy initiatives and without interest rates coming off in India, I don't think so valuations will be in a hurry to go up. And similarly, with global issues being what they are, I think the risk appetite doesn't seem to be there. And as you all know, that our markets are basically a function of FII inflows. We have been lucky this year that we have not seen any great FII outflows for the calendar year 2011 so far. But if risk appetite goes off, then there could be a challenge. And emerging market investors, they probably have better opportunities in other emerging markets. So we may, unless we come off reasonably well, we may not see a flood of FII investments.
Thanks, Krishna, for joining in today with your views.